Hi, this is Brandon Christy from Christy Capital Management with our May 2015 Educational Economic Update. In this month's video, we're going to talk about some of the major economic headlines from last month and give you some insight into what they might mean for you as an investor. Please stay tuned at the end for a required disclosure statement. The Federal Reserve was in the news a lot last month as Fed economists continue to debate raising interest rates. Let's go back to basics for a moment. Investors care about interest rates because they affect a lot of things: bond prices, mortgage rates, corporate lending, and inflation. If you own bonds, you'll see that when interest rates go up, bond prices tend to go down as bonds paying higher rates come on the market. If you're in the market for a car or house, higher interest rates will translate into higher loan rates and larger monthly payments. Businesses will also have to pay higher rates for credit, which can translate into millions or billions of dollars in extra costs. So why is the Fed going to raise rates? Well, the short answer is they need to get back to normal monetary policy to fight inflation, which can become a problem in ultra-low interest rate environments. To boost the economy after the last federal crisis, the Fed kept interest rates artificially low. Now that the economy is doing better, the Feds want to slowly bring rates back up. However, the latest data shows that the economy may still be vulnerable to shocks, and the Fed doesn't want to rush interest rate hikes. At the end of May, economists released revised first quarter gross domestic product growth numbers, and we found out that the economy actually shrank 0.7% last quarter instead of growing. While the news isn't unexpected, it's not welcome because it means that the economy recovery still hasn't reached escape velocity. The contraction appears to have been the result of harsh winter weather, a strong dollar, and reduced business demand. Though we don't have data on the spring quarter yet, many economists expect a significant rebound in economic growth. We've seen estimates ranging from 1% to 3.2%, so it's clear there's a lot of room for debate on the economy right now. On the positive front, recent employment data shows that the economy added 223,000 new jobs in April, pushing the unemployment rate down to 5.4%. Wage growth also edged higher as some workers were able to earn higher paychecks in a more robust job market. In the weeks ahead, investors will be watching for more insight from the Fed into interest rate hikes. They'll also be poring over economic reports to see whether first quarter weaknesses continued into the second quarter. We hope to see future improvements in housing, manufacturing, and consumer spending as the year progresses. As always, we're keeping a close eye on financial markets and the economic environment. We'll let you know if and when we think changes to client strategies needs to be made. Once again, this is Brandon Christy with Christy Capital Management and your May 2015 Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, please give our office a call at the number below. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, give us a call at 866-331-7749. It'd be our pleasure to talk with you.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision.